your viewers know that I'm a big fan of the payment space, and with good reason. Hey, look, lately Visa and MasterCard have caught fire. But tonight I want to focus on a lesser-known part of the industry that hasn't been keeping pace with the credit card companies lately. Global Payments, GPN for all you home gamers. Global Payments is what's known as a merchant acquirer. They're the ones who sign up retailers to credit card networks, enabling merchants to accept electronic payments. Basically, they own the client relationships in this business, and they get 2 to 3% cut from every transaction. On top of that, Global Payments has some exposure to e-commerce, cross-border payments, gambling-related solutions. Mostly, though, they're a merchant acquirer. Now, Global Payments reported a strong quarter roughly 3 weeks ago. Not only did they beat Wall Street's sales and earnings estimates, the company also raised its full-year forecast for both the top and bottom lines. Their business accelerated nicely, double-digit organic growth. Yet, while the stock has been a fantastic long-term performer, up 377% over the last 5 years, it's been lagging behind the credit card names of late, only rallying about 9% since I recommended it in early November. It makes no sense. It deserves much more. So let's take a closer look with Jeff Sloan, the CEO of Global Payments, to learn more about his company and where it's headed. Mr. Sloan, welcome to Mad Money. Good to see you, sir.
Thanks, Jim.
Thank you for coming on, Jeff. All right, here's my thinking. Tell me if you think I'm wrong, but you've spoiled Wall Street. You have had much faster growth than everybody, and so when you report much faster growth than everybody, people say, oh, okay, well, that's fine. That's Global Payments. I mean, that's kind of how I feel about your stock right now.
Well, I think you're absolutely right. I think markets go in cycles. You talk about this all the time. Sometimes everything is good. Sometimes everything is not enough. And I think that's exactly where we are. We try to focus, Jim, on how distinctive our technologies are and distinctive our distribution is, coupled with the emerging markets that you just described, and that produces the results that you've alluded to.
Well, I'm glad you mentioned that what you're focused on, because to me, you're a software company. I mean, fintech, that means nothing to me anymore. You're a software company that has the best software, and you're giving it to merchants in the cheapest form.
Yeah, you're exactly right in what you said. So today, about 40% of the business is technology enabled, where we're selling our own software. By the way, we sell it not just in restaurants, but in universities like Bucknell, for example.
Right, that's true.
My son just graduated last week from the University of Pennsylvania, so when I paid his tuition, I paid it with our software online, and then he goes to the commissary, the cafeteria, and we are involved in that too. And we're also involved in about 40,000 schools across the United States. So that is our technology enablement. That's 40% of the company today. It's going to be 60% of the company.
Event also, I thought that was great. Event organizations, community organizations, they don't know how to do it. They're cash-based. You make it so that they can accept it.
That's exactly right, Jim. So one of the things I think we've done a very nice job of, an active network, which we purchased from Vista Equity Partners in September of 17, is a great example of this. We're a complete outsourcer. So the YMCA, for example, Stanford University, turns to us and says, listen, we don't know how to manage these events. We don't know how to track down consumers. We don't know how to integrate your phone, where you can sign up for a triathlon on your phone, pay with your thumb, and go sign up the event. That's what you guys do. Please do that for us. As you can imagine, that's a very sticky, high retention type of business with very fair pricing.
Now, you've got some fabulous relationships overseas and not in traditional places. Great business in the Philippines, which is large. People are worried about Europe. But when you have a business like with a Czech bank or with a Spanish bank, those are the two hot markets. Europe is not one flavor.
You're exactly right in what you said. So what we're most proud of, and probably one of the secrets about Global Payments, is that a quarter of the business is outside the United States. Right. That's in Europe and that's in Asia. Our faster growth markets in continental Europe with Erste Bank, which is based in Vienna, is in the Czech Republic, where we have about half the market of the Czech Republic, in Romania and the like. We have the same thing in Asia, where we're across 13 markets in Asia, which is where all the growth is. In the context of the Philippines, as you mentioned, fastest GDP growth in Asia, faster in some cases than in China. We have 28% of the acquiring market, of the payments technology market, in the Philippines with our partners. So that's what's driving the outsized growth that you referred to. 15% organic revenue growth in Asia last quarter, 22% in Europe, about 9% constant currency.
Okay, so one of the things I was thinking about, your CFO had a great line of people said, well, hold on, wait a second, where do I get the app? And you were saying, no, it's actually the merchant. This is not Visa or MasterCard, and it's a different kind of system. You're not expected necessarily to know who Global Payments is if you're one of our viewers.
You're exactly right. So we're really a business-to-business to consumer type of business at the end of the day. So we really stay behind the scenes. But increasingly in our businesses like Active, or in our university business, or in our schools business, we're developing the mobile app ourselves, and our partners are, of course, using that. So, for example, in the case of our restaurant business, where we have 100,000 quick service restaurants just in the United States, when we look at our partners like Bojangles or Whataburger, you can actually order your sandwich online, pay with your thumb, and go pick it up. That's really all our stuff. To your point, we don't talk a lot about it at the end of the day, because the most important thing, Jim, is the merchant. It's not Global Payments. Obviously, we charge a fair price for that.
Now, one last one. PayPal, which you know we like very much, we like Dan Schulman. You guys have a long-standing relationship with them. They just acquired a company that could make it so that they're far more competitive with Square. Will you figure in the bundle?
Yeah, so I would say is they're a terrific partner of ours. I think Dan is a great guy, and that's a great business. The way we look at it is, first, I would say that the business has always been very competitive. Right. So it's not like Barclays doesn't know how to do acquiring in the United Kingdom, or JPM isn't smart.
Right, I mean, JPM, if you have an account with, if you have a checking account with them, you tend to end up being their customer.
That's exactly right. So we already have very smart, intensely competitive businesses. But to step back for a second, when you ask our folks in Europe, we just don't run into iZettle that much. And the reason for that is they tend to be a little bit like Square, really at the micro merchant level. So our typical merchant worldwide, but particularly here in the United States, is about $250,000 a year of volume. So those merchants are much smaller. To give you a way of comparison, 150 million in revenue for iZettle on 500,000 merchants. We have as many merchants, our revenue is quadruple that.
Well,
so it just gives you a sense of the average size. So it's not to say it's not a good company, it's just to say that that doesn't really change the landscape the way we actually operate. We expect PayPal will continue to be a great partner.
All right, great. I wanted to clarify that. And Global Payments, just like I said at the top of the show, is one of the consistent great companies that right now is not being rewarded, but will over time. And that's what matters in Mad Money. That's Jeff Sloan, CEO of Global Payments. Terrific company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.